Hello everyone, Theunis Kruger here from South Africa, talking about Forex markets. Right, as always, I just want to check if you guys can hear me, if you can see me. If you can hear and see me, please just use the questions department and tell me yes. If you type in yes, then I am assuming that you can hear me and see me. If there's any problem there, just type no. Okay, Radman, thank you very much. I can see you immediately responded, so you can definitely hear me and see me. Okay, there's some other smarty. Yes, some other guys. Mike, welcome, guys. There's somebody else. Kolpesh, yes. Okay, I assume you guys can all hear me and see me. Welcome. Um, I'd like to just give a short background of where I am and why you can listen to me. I think you can learn something. Just before we begin, if you would just tell me very quickly, just to get some feedback, if you would rate yourself as a trader, do you think you're a beginner, intermediate, or advanced? Where would you put yourself if you had to judge your skills of understanding the language of the market? If you guys can just respond there in the questions, beginner or intermediate or advanced. I'd like a little bit more feedback, and normally I tend to, because I'm so passionate about trading, I just start talking. Okay, Harry says intermediate. That's good. That means normally you've been trading for a while, and hopefully it's going well, or sometimes you might be stuck. So you make some profit, you lose some profit, you make some profit. You can't tell me anything about that. I was stuck in that rut for a long time until somebody helped me to fix my foundation. That's what I do these days. I help guys to get unstuck. Or in the beginning, to what I call to get a solid foundation. Anybody else? Radman, Mike, what do you think you are? Beginner, intermediate, advanced? I think I mean with advanced is you can make a net profit over a series of trades. That means you've got a good foundation. You are able to make consistently make more profits than losses over a series of trades. You can never manage that or measure that just over 1 or 2 or 3 trades. You have to take a large sample size. Beginner, Kalpesh. Okay, that's good. What I'm trying to do is just get a feel for who's here, who's listening. If there's only beginners here, then I talk a little bit different, and I'm not going to talk about advanced or more complicated stuff. But if I do, then obviously the beginners might not understand. But if there's a lot of intermediate guys, or sometimes there's advanced guys, then we can even engage and ask a few questions and get feedback from a person who says he is making a net profit over a series of trades. He's got a good foundation. Anybody else? Okay, let's get started. Seems like the guys are shy. Right. Today I'd like to stand still with talk about the educational resources. When you start something new, or when you've been trying something and it doesn't work like you think it should work, your expectations are, it's not being met, then there's a few things you can do. I like to use examples. It's like when you start learning a language. Firstly, you must check your expectations. You might, have wrong expectations. You might think, I'm going to learn a language in a week, and then in actual fact, it's not possible. It doesn't take, it takes longer. Otherwise, then that would be nice, if you realize, okay, it's not going to take a week, it's going to take a little bit longer, then you can adjust your expectations. Otherwise, what is very important, if you're starting something new, is to get the basics right. If you don't get the basics right and you start practicing and everything, then it's almost like you have a foundation and your foundation has cracks on it. It's not fully set. It's not in all there. And now you start building and your walls fall over the whole time. So you get very frustrated. Why doesn't it work? If your basics is not right, then it will never work, guys. So a lot of guys jump into the market thinking that a couple of indicators, a combination of indicators will make them rich. And then that just doesn't work. It doesn't work that way. It's like a language that you learn. And with any language that you learn, you've got to get to know the structure of the language. You've got to get to know, what it's all about. To use just a normal example, if you start, let's say, a supermarket business. So what is the basics of that type of a business? The basics would be to get a place where you're visible, where your clients can park and everything. So it make it easy for them to come to your place. Then you get personnel that's friendly and that'll helpful and that'll help the people. And then you get suppliers with which gives you good stuff at a reasonable price. So that's some of the basics that you have in place. If you don't have that basics in place, then you're going to struggle with your business. Even doesn't matter how hard you try. So what is the basics of this business? I like to summarize right in the start here for you. We as traders, online traders, what are we trying to do? If you look at any chart, guys, then you will just see three phases, three letters in this language. It's very, very simple. But it's not easy because people tend to clutter it. So what do you see on any chart? Even if you look at just this chart in front of me, what do you see? You see prices going up and down. There's uptrends, there's downtrends, and there's ranging markets. It's very, very simple. It's not complicated. But when you clutter it, then it becomes very difficult, right? So keep it simple and then it's possible. So what are successful traders do? What they do? The market ebbs and flows. The market goes up and down, and when it changes structure, when there's a downtrend and it starts becoming an uptrend, and you see that, you can recognize that, and you take a calculated risk there, and you manage that risk very well, then you get the capacity. If you can consistently do that, you're not trying to be right, you're not trying to predict the price or anything, you just see that structure, the market speaking, warning you there's a shift in balance, taking a calculated risk. If you do that consistently, then you get the ability to make a net profit over a series of trades. That's all that successful traders do. That's it. You keep it simple and then it becomes easy. In the beginning, it's not easy because there's so many things you don't know yet. So the reason why I do this webinar is just to take you through some of the resources we have to get you familiar with the basic terms. So we're going to start with this. There's a couple of resources that you can see on our website, and I'm going to jump there quickly so that you can see what I mean. Right, let's go to the website there. If you go to the website, please guys, if you have any questions, just drop it in there, just type it in there, and now then I'll look, and then we'll go through it. I want you to get answers to your questions. It's very, very important. It's part of the learning process. If you have a question, ever write it down and get answers to it. The answers is you get the answer and you discuss it, you think about it, and then it's part of that learning process. You try, you learn, you grow. That's how you master anything. Right, we've got an educational department here, and this is where you can see all the tools that's available. For instance, the first one, the beginner's guide to Forex. There's a couple of things here, and I know it's a bit difficult, what I start with. It's very simple. What is your question? So if you don't understand what Forex is, what is Forex? Click on there and you'll get some answers. You see, it's a foreign exchange markets. Right, so GUS, what's happening now? Yeah. It's jumping up and down, yeah. Right, foreign exchange markets, the world's largest market. You're going to get some answers to your questions. Right, and that's what you want. So get a feel for what this is. There's a lot of things there. My personal, if I can give you a tip, the short Forex educational videos. That's almost like a shortcut, especially when you don't know where to start with in the beginning. Here you're going to get very, very short 1 minute, 2 minute video clips. And with the learning process, it's important to get different perspectives, right? So if you click on this, what you're going to see is a video clip that you can listen to and see. So that's visual, that's income, and then you can also read this. So it's repetition. So what is it? What does it stand for? Where does it come from? Why is it there? So you get answers to your questions. Don't just mindlessly go through everything. Just, what is the questions you have? If you start with what is Forex? And then when I speak about a language, it's got a structure, trends. What is a trend? Here's the answer to your question. What is a trend? If you scroll down a bit, you'll see what is a trend. You'll find what is a trend in there. Where is it? What is an uptrend? What is a downtrend? So get the answers to your question, right? So step by step, you can take it from here. Obviously, one of the things you're going to need is once you get through this first phase is your tool that you're going to use, MetaTrader. So there's that's very easy when you log onto your account. Let's do this. Right, let me just get onto my other platform. So when you log onto your account, the reason why I do this is I get a lot of questions with regard to this, and it's nice to have some guidance. These webinars are recorded, so I can always refer people if he says, yeah, I'm not sure, how do I start? Then I can refer you to this, and then you can start. So you can see how it's done, and you can, especially if it's nice, if it's a recorded webinar, then you can stop and you can just check it and do it on your own, and step by step. Right, when you log onto your account, then you will see there's platforms. What I normally prefer is that you have some sort of a laptop or something. You can learn on your phone as well. It's just a very small thing. So if it's possible, it doesn't need to be a fast one, even second-hand one, doesn't matter. When you go to platforms, then there you can download a whole array of them. So obviously, if you're on your phone, it's very simple. You just go to App Store or wherever you download your apps. But here's another way to do it. So if you've got a PC, if you've got a Mac, whatever you have, you'll find it here. Android and so on. Right, and when you click on it, then what it does is it downloads the setup file. And then when the setup file is downloaded, you double click on it, and then it'll install it. Right, so when you initially start, it's good to open a demo account. So if you click on your accounts, open a new account, you can see you can choose a whole array here. The demo account has got a very, very specific purpose. Like it says here, you're applying, you're starting to try and learn, you're starting to try so that you can learn and grow your knowledge. You can practice in real market environment. It's exactly the same as a live account without risking any of your money. You don't want that additional pressure when you're starting to learn something. When you learn to drive a bicycle, you go to a place with nice, soft, thick grass that if you fall over, you don't get that. Okay, you put a lot of mattresses and stuff there. Okay, so or you get somebody to stabilize you from behind, whatever. So this is the way we start. You select, you open a demo account, and then go through the steps here. What I suggest in the beginning is just a normal ECN account. Let's go through the step and open one. So USD, you can choose what you want there. Leverage, this is going to be a demo account, so it's not so important. But when you open a live account, when you don't know how to manage your risk, if you're not sure about that, just make it as low as possible, 100, 250 or whatever. But if you can manage your risk, then this really doesn't matter, because you're going to manage your risk well if you trade with a calculated risk, small percentage of your account. Then this leverage doesn't really matter. But if you're trading with huge amounts, 10, 20, 30% of your account, then it's better to make the leverage a little bit lower. So or else you can blow your account very quickly. Right, you choose a password, you choose just to repeat the password. I don't suggest starting with such a big number. Something like 5 or 10,000 is a good realistic measure to start with. The reason why I say that is that let's say you haven't got a lot of money. You start on a demo, you learn, actually start on the old charts. And you get to know this, you get to know the language of the market, where to take calculated risk, where to manage your risk. Then and you're ready to start, then we're going to open a cents account. It's real money, but it's cents. So you put in $10 or something, then it's 1,000 cents. $100 is 10,000 cents, right? Then you can practice with realistic lot sizes and all those things. So it's possible with even somebody that hasn't got a lot of money to start to get to know this business, to practice before the time when you get confidence, when you prove to yourself on a demo a sense. Some guys say they don't like a demo because it's too much like a game. It doesn't have to be. If you treat it right, it's very useful. But a sense account is also useful because it's a sense that you're risking, but you're still trying, learning and growing, trying, learning and growing. If you can prove to yourself that you can make a net profit over a series of trades in one of those accounts, then we slowly progress to a standard account, to ECN account. Right, this is just a demo account. Right, let's go on with our let's go back to our presentation. I've got a Mfundu asks, what about screen sharing? Is that something you do? Screen sharing, I'm assuming you're talking about Zoom or what, Skype. Yes, I do a lot of one-on-one trainings with guys. I've got group sessions as well. So if you want to train some harder, what we do is normally the basics is covered. So, and then, or if you're a beginner with one-on-one, I show you the basics. I refer you to a couple of nice recorded webinars where you can, you can do it in your own time, and then we practice, guys. If you want to learn any language, you have to practice. You can't learn a language by listening to somebody else speak it. It helps, but at some stage you have to, start pronouncing the word and start trying. That's why I showed you the MetaTrader. You download the MetaTrader, and as you learn about the basics of structure, then you can start applying it. You can start going onto the charts, getting to know the tools, how to move around on MetaTrader. We've got some nice recorded webinars that shows you the basics of what to do, and in this coming month, I'm going to do a webinar that'll always also be recorded, where I'm going to just show you how to set up the first things about MetaTrader. You don't need to become an expert. You just need to open a chart with a normal line chart so we can start seeing that structure of the market, practicing how to see that. That's always step one with me. Right. So let's go on. There's lots of interesting things. You've got the beginner's guide. You've got the trading signals. That's got a purpose. I'll explain that a little bit later. There's articles. There's videos. There's pivot points. There's a lot of interesting things, seminars, webinars. So let's step. I'm not necessarily going to go through every slide here. I've got a little bit of a time limit, but I want to make it as practical as possible. Right. A very interesting thing I just want to show you about the. You guys will see I try to make it practical. So let's go and look at the signals. I get a lot of questions about the signals. Should I find them? Should I follow them blindly? According to me, my opinion is don't follow anything blindly, guys. Do your own homework, check to understand. This is a very, very good, handy learning tool to help you to understand, to see the structure of the market. So what I'm going to do is, if you log on to my FXTM, you go to Trading Services, and you go to Trading Signals. What you will see is the following. Before the London Open, about 8 o'clock, 8:30 in the morning, and that's GMT +3, and before New York session, 3 o'clock in the afternoon, that's GMT +3. Then what we do is once in the morning, once in the afternoon, depending on your time zone, we go and for 14 trainers, for 14 different instruments and currency pairs, we update it. We check what is the structure of the market. For instance, the gold, this is how the structure of the market looked: up waves, down waves. As you can see, there's not a very good trend yet, higher tops and higher bottoms. It's more of a ranging market. But what this does is it helps you to see the structure of the market, and also to see how would you start placing entries and stop losses. We always use the structure of the market with that. we listen to the market. So in this case, this is not a very good trade according to me, for the simple reason that there's no good uptrend here. We're looking for early stage of a new trend. That's what technical analysis is all about. All right. So what I see here is a bit of a market. What we did is, because we know some guys, even though you warn them or whatever, they still, blindly follow it. Is what we did is we put guidelines here, which is very, very, very conservative. So if you take a calculated risk there, then it gets to your first and your second take profit very, very quickly. And depending on how much partial profit you take, then your risk is not a lot. The reason the stop loss is dynamic, so it changes according to the structure of the market. There's not a fixed amount of pips or whatever. That's dangerous. We let the market tell us what to do. So if the market structure is a bit wider, we put our stops wider. If the market structure is a bit closer, then we can put our stops closer. The idea is to stay with the trend, higher tops, higher bottoms. So this dictates to us where we're gonna put our trades, where we're gonna take a calculated risk. Right, I see there's another signal here. Jerry, or question, said, hello, I noticed that the signals lots of times appear only after the market is open. Yes, what we do is, this is not a dynamic, this is not a live chart. So you'll see the time here, GMT +2, it says here at the stage. So this chart was loaded, I actually did it just before I started. So I loaded this chart. So we take a snapshot what is in the market, and you can at that time, and obviously the closer to the time you look, the more relevant it's going to be. If in the meantime the price is shot up and it's broken that line, then it's obviously, it's a different setup. If it came down in the meantime and broke there, then it might be too late. So if you're interested in following this and learning from this, then obviously the best times would be to look at the times we loaded. This is 13 GMT +2. I think it's actually GMT, it must be GMT +3. So, but anyway, so and then in the morning, that means that if you do late after this, then it might be gone. So that's why I tell the guys, use this. It's fine to confirm or something, but if you know the language of the market, if you know the structure of the market and can apply it yourself, obviously you can look in at any time, at any chart, and even at any time frame, and see the trends, see the early stage, wait for an early stage of a next trend, and you can take your calculated risk there. Solely leaning or just using this will obviously be very limited. So this is the first time. We can just go back a little bit, and I can show you this morning. Let's look yesterday. We choose the morning session. You can see there that is 8:29, and this chart was loaded yesterday at 8:29 GMT +2. And what happens is if you logged on at that time, you'll have to sort out your own rhythm there. When you look at signals, if you want to use this, if you log in there, you would have seen, this is a possible signal. You can interpret this. There was definitely a nice uptrend there. It's changing, and might still be the early stage of a next trend. Started making lower tops and bottoms. This is the most useful thing of this signals. It allows you to start practicing to see the structure of the market. The structure of the market is always step one. Guys that lean on, or they follow a method looking at the indicator, all indicators are late, guys. There's only one indicator that's perfect, that's always following time, and that's the price. And the price has a structure. If you understand that, then you've got a big advantage over anybody else just looking at a couple of indicators. Right. Indicators causes you to be either early or late. Understanding the structure makes you much, much more accurate as a trader, and that just makes it more possible to make a net profit over a series of trades. Makes it easier. Right, let's jump back. I'm standing still. I see the time is going. Right, so there's lots of things for you to look at there. Like I said, the key is to success in any business, in fact, is education. That's why we've got that website. Use it, guys. Let's see, wait. There's another question here. I like questions. Okay. Manda says, hi, sorry if it's a question. No, there's no such thing as a silly question. If you don't try, if you don't ask, then you can't learn, you can't grow. So why use the 30-minute charts when giving the trading signals, personal preference? Right. The head of education that programmed that, he trades basically likes the 4 hours and the 30 minutes. And his reasoning is as follows, but you can actually trade, if you know the structure of the market, you can trade any chart, because in any chart from the 1 minute to the 4 hour daily, even the monthly, when you open the chart, you will see uptrends, downtrends, and ranging markets. So if you do what fundamental analysis, the skill of fundamental analysis says, look for an early stage of an next trend, and you take your calculated risk there and you manage your risk, then it means you can trade on any time frame. The 4 hours is useful because people that work don't necessarily have time in the day to sit and monitor the trades. So what happens is, because we're trading the structure of the market, if you see a possible setup, a possible early stage of a next trend, and you put in your trade, then you only have to monitor it every 2 or 3 candles. You don't have to monitor it every candle. The reason being that we're waiting for a change in structure. Right. So if it's 2 or 3 candles when you're trading, the 4 hour charts is 8 to 12 hours. So that means you can check before work and you can check after work. Obviously, it's a higher time frame, so there's not a lot of opportunities. The 30 minutes on the other side is not a very low time frame. So there is noise, but not that much. But it's useful. You can watch. You can take in the day you might get 1 or 2 signals in the London Open, and let's call it 1 signal in the London Open and 1 signal in the New York session, at the London Open and at the New York Open. That's why we also give our signals at that specific times. So if there's a setup, you can take it, and then obviously you have to monitor it. If you monitor that every 2 to 3 candles, half an hour or 3/4 of an hour, just to see if the structure hasn't changed. If the structure changes, then we take what the market has given us and we get out. And there might or not be another opportunity to trade. So it's from a practical point of view, it's actually very useful. There's 4 hours for the guys that work, 30 minutes for guys that do have time, but they don't want to sit glued to the screen. If you see a trade, you take it, and you can do something else for half an hour. No, sorry, so it's a 30-minute trade, so that's an hour to an hour and a half. Sorry, 2 to 3 candles. So you can do something else in the meantime. You don't have to sit glued in front of your screen. So he's one of his principles is, and it's quite true, that if you don't know what you're doing, even if you know what you're doing and you sit glued in front of the screen the whole time, you get cluttered. Sometimes you take difficult, not wise decisions, but they call it decision-making fatigue, analysis paralysis. It is wise to just, you see, is there something on the market? If there's not, go do something else, or you don't have to sit glued in front of your screen the whole time. Right, another question. Right, what is the best time frame to analyze your charts? Okay, I think I answered that. Any time frame, as long as you understand the language of the market, that structure. Let me go and show you, just like I'm gonna have to zoom through all those others, all that other slides, but you guys, oh yeah, you ask questions, so you're the people, you're the most important people. So when I talk about the structure of the market, guys, I'm talking about, and you can make it as easy as possible. Just test it. Test what I'm saying if it's true, to make a net profit over a series of trades. Take all the indicators away. Put your chart on line chart, and use the 4 hours. It's a nice test. It's a higher time frame, so the structure is still fine, especially if you can't see the structure yet. And then you just simply mark. Use a trend line, and you simply mark all the trends. Higher tops, higher bottoms, lower tops, lower bottoms, higher tops, higher bottoms, lower tops, lower bottoms. Let's just get the scrolling buttons off. And as you can see, if you take a calculated risk at the early stage of a next trend, we never know how far it's going to go. But if you take a calculated risk and you manage it well, if the structure changes, you protect your account or take whatever the market has given you up to that time, then it becomes possible to make a net profit over a series of trades. Identifying the structure of the market like this, and then afterwards, obviously, you can use, if you want, you can use a few indicators, but be very, very careful. A lot of guys get stuck because they put so many indicators on, and then they get confused. The moment you bring clutter in and you get confused, forget it. It becomes almost impossible to make a net profit over a series of trades. You make it simple, you listen to the market, you take your calculated risk, and then there obviously you would have protected your account, which is also a good thing. A nice profit, a nice profit, a nice profit, perhaps a small profit or a loss, smaller profit, small profit. As you can see, there was actually a good place to get involved there, early stage of an next trend. Then it becomes possible to make a net profit over a series of trades. Right. Another question. Is it bad to guess the market? Yes, Mfundu. We will never be able to predict what the market's going to do. The bigger problem with that, if you try to predict what the market's going to do, is that it creates mental problems. Now you think you know what's going to the market's going to do. It's a lie, because there's thousands of people trading and you don't know what they're going to do. So we can see the structure of the market, yes, but we can see the change in the structure, yes, but we don't know how far that the trend will go. That's why we need to take a calculated risk, and if the structure changes, protect our account. Thinking you can predict causes your brain to start blocking a lot of information, because you are telling yourself, now I know what's going to happen. Now you're not objective anymore, you're subjective, and you see things that might not even exist. That's why guys take trades and afterwards they say, what was I thinking? You know, how could I trade this trade? So anyway, so let's see, there's another question. Ooh, I like it. That's good, guys. I can see in this chart the trend. I suppose you're mentioning this one. The trend is going to change, and when it's not changed, but it's just a price correction, right? Now, what you're saying normally, what guys get confused with is they get confused with these small movements inside a trend. They think, you know, if the market starts changing here, no, it's going to be something new. That's why it's important to see the whole structure. That's why I simplify this by telling the guys, start practicing on a line chart. Take out all clutter. Later we will put the candles back, because the candles represent the emotions of the market. But in the beginning, just train yourself to see this ebb and flow of the market. Later, when we put the candles with, you're still going to have to practice not to look at individual candles, but see the flow, see the ebb and flow of the market inside these candles. And the market gives you, tells you where to put your entries based on these structural changes. All right, so we never know how far it's going to go, but we will always be able to see if there was a trend, if there was a structural trend. If this was, for instance, happened here, you'll always see this is an uptrend, right? What happens here? The structure changes, it makes a bottom, then it makes a lower top, then we put our entry. This is just a very very short way of telling you. And then if the market goes past there, then we have a calculated risk, and then we start managing our risk by taking we normally use the Fibonacci's to take some partial profits here to make our risk less, because we never know how far the market's going to go. Never, ever. And you don't have to know. That's a nice thing. There's a lot of stress, thinking you must predict the market. so it's a lot less stressful to just listen to the market. We take profit when the market goes a little bit in our favor, and then we wait for the structure to change again. If the structure changes again, stops making lower tops and bottoms, then it's over. Then we get out with whatever the market has given us, or we protect our account if there's no good profit, and we wait for the next early stage of the next trend. Right, I think we're going to step off that topic so we can actually finish with this presentation. That's nice. Okay, so I'm gonna go through this. I think we've discussed most of this. Okay, so there's lots of guides, guys. Go and listen. Yeah. Go and read it. There's guides about introduction, the roles of a broker, um, what the market is about, the volume, the interest stake. The volume in the forex markets is different than the volumes of the stock markets or the future markets. The forex market is decentralized, so it happens all over the world, and most of the banks facilitate this. There's servers and things. So the volumes here is not the same as a stock exchange, where it's actually a centralized one, and they can know all the transactions that every person did. Volumes with forex market, because it's decentralized, it's just normally one issue in your chart is the number of times the price changed during that candle. That's what we mean with volume. That's just for interesting sake. It's over the counter, global, hundreds of thousands, if not millions of people trading for different reasons. Right. So I'm going to skip through this. We don't need this. Right. There's a couple of currency pairs. There's also commodities and other instruments. Just an interesting fact if you're beginning, there's 3 groups. You get the majors, it's about 8 different ones. We're looking at some of them here. Then you get the minors, that's or mixes as they call it. That's different combinations, and then we get the exotics. Right, the exotics is emerging markets, Turkish lira, South African rand, not big world economics economies. Right, 80% of the volume of the guys that trade the majors. So it means there's a lot of liquidity. There's a lot of people buying and selling. That's what liquidity means. So if you're practicing, especially in the beginning, stick to the majors, guys. That's where most of the volume is. And when there's a lot of volume, when there's a lot of people trading, volume and liquidity combined, a lot of people trading, then the price structures tends to be a little bit more stable. Right, this is just a very quick. Some people have questions about the pairs. Why is it not just gold or silver? Why is it always pairs? The reason is when there's trade between countries, then you have to exchange. So obviously the most traded currency pair is the euro and the USD, Europe and United States. So if some company in the United States wanted to buy something in Europe, then he has to exchange his dollars for euros, and this is where this comes from. So you've got your base currency, you've got your quote currency, and depending on the strength of the economy and people's perceptions, of course, that exchange rate goes up and down. All right, so that's just interesting, and there's a number of ways. This is going to stand still here. I haven't got enough time. I've got another basic one where we go deeper into working this out. So making sense of, if I sell €1, I get that much USD dollars, and how you work out your price and so forth. Right? Brokers, very, very important, guys. I've been trading since 1997, and I've been through a number of brokers. Unfortunately, brokers was for a long time, it's like the wild, wild west. Forex is like the wild west of the of the financial world. A lot of guys that's unscrupulous, that's not licensed, that steal their people's money and manipulate the charts and all sorts of things. Luckily, the last couple of years, regulations have started coming in, stabilizing that, pushing those scamsters out of the way. Now, a broker is simply someone that acts as a third party. So you can't directly buy, at a bank, with big volume. So you've got a broker, just like you've got a broker with a stock exchange and a futures exchange. So he facilitates those and connects you, with the market. Always when you check, guys must be regulated. Forex time regulated. We're serious about it. Unfortunately, brokers tended to not educate their clients so well. People lost a lot of money. It was actually normal to lose. But the new generation, like Forex Time, Invest brokers, they educate their people. We want to keep you as a client. We don't want you to open an account and just blow it and leave. We want you to know what you do. And there's lots of opportunities inside this, inside Forex. whole world there. Right, so we assist you, provide leverage, and especially there's different kinds of accounts for different people, short time frame guys, long time frame guys, um, cyber, not cyber, what is it? The currencies, the Bitcoin and all those things. Right. Okay, long and short, I'm not going to stand still here. If you've got questions, I'll put my email up, and then you can ask me later. You also get answers in the short videos, the educational site, right? But what does it mean when it goes up and down and everything? This is some of the majors, like we spoke already. This is some of the minors. This is just different mixes. The majors: Euro USD, USD Yen, Japanese Yen, British Pound USD. Right, so we've spoken about this and the exotics as well. That's just emerging markets. Lower trading volumes, lower liquidity, and much more jerky. So I know guys that trade them, but you have to learn the language very, very well. Okay, candlesticks. You get different kind of charts on your forex, your MetaTrader. Candlestick charts, bar charts, line charts. As you can see, when I start the guys off, I start them off on a line chart just to see the basic structure, and then I go to candlesticks. They have a lot of information inside those candles, right? So at a early stage of the next trend, with that flow, you can see the emotions there. Some guys prefer bar charts. That's your choice. It's a very open thing. As you learn, you decide what you like. MetaTrader, that's what we spoke about. That's a tool we're going to use. You download it, and then you can start practicing on that. That's time well invested to do that. The signals we've already discussed. Yeah, that I showed you already. Okay, the articles is very, very useful. I think I'm going to quickly go through there. Let me just see. How's the time? Yeah, we still got time. Okay. Yes, there's some nice questions here. I'm really confused. Okay, what is the difference between a market maker and an STP broker? Right. Market maker, you will hear a lot about. It's actually liquidity providers. For every position that you take, obviously somebody has to take the opposite side. So if you sell, somebody else must buy. If you buy, somebody else must sell. Now, if there's not enough liquidity, if there's not enough people buying and selling in the market, and you're trying to buy, then there's just nobody that wants to sell. So the first most important job of any broker, guys, is to get people that are willing to take that counterpart. That is what we call market makers, or actually I like the better term, liquidity providers. So when it's a small brokerage, then they outsource it. They get different data centers, liquidity providers. So they just send their signals through, and then whenever the client wants to buy, he sends it through to those data centers, and then they connect them with a suitable, if they want to buy, with a suitable seller, and the other way around. If you don't have liquidity providers, then just nothing happens, right? You try to sell, but there's nobody else to take the counterpart. So that's the first important job. Now, if it's a small guy, like I said, they connect to other liquidity providers, banks. You get data centers that don't do that, but obviously they're expensive. So that puts the price, the spread up. If you're a big enough broker, then you can provide liquidity for yourself. That's why it's so important for a broker to be regulated. Because in the old times, you got bucket shops where the broker provided their own liquidity. They took the counter positions. That does not mean they trade against their clients. They just take the counter positions, so the clients can actually trade. So, but some of the old guys, some of the bucket shops manipulated their charts. So, and that was very bad. These days, if you do that, then you get kicked out of business, or your clients leave. So some brokers do provide liquidity from their own, and the advantage there is that you can provide immediate execution, right? So we've got standard account where we trade cryptos and all sorts of things. So where we provide liquidity, that means you get instant execution. That's very, very handy. What happens with when you use data centers, and that's where that's our ECN accounts, electronic communication networks, where we send it through to other liquidity providers. Then you don't get immediate execution. You get market execution. That means that if there's not a buyer or seller, they jump to the next available buyer or seller price. So you get slippage there. So you don't always get the right price. Luckily, with both, there's not a big problem because the markets are used. There's normally an abundance of people of liquidity, taking the other sides for different reasons, right? So manipulation, that means when brokers trade against their own clients. Obviously, they can see where the levels are, and they take positions on their own against their own, their clients. That's absolutely nuts. The moment that comes, when they're audited, when they're registered, when they're not registered, you should anyway be very careful. If a brokerage is not registered, when they get audited and that gets out, then they're gone. So that luckily doesn't happen a lot anymore. But with small guys that's not registered, be careful. It might happen. Right. I see a lot of questions here. Okay, I see a question about why the majors. The majors simply because 80% of the volume and the liquidity goes through those ones. So they're nice and solid. Lots of guys buying and selling. Price structures are better than the exotic and the mixers, especially in the beginning. So okay, people said OCT markets are manipulated. Yes, you do guys that manipulate it, and they normally don't become very big, and they don't retain their clients because you can obviously compare your charts with other guys, and as soon as it comes out, there's people that monitor, like PIP police. They monitor these things. The regulators themselves of every country, financial boards, go and audit the guys, and especially if there's clients that's complaining, then it's not good for the reputation of the brokerage. So those type of guys don't last long. They go out of business or they don't become very big. So okay, I think I'm gonna go on. There's a couple of questions, but I'll jump. There's a couple of questions regarding the commissions and stuff. But I'm gonna see if it features here. Our time is just limited, guys. So if it doesn't feature, I'll quickly answer at the end. But I just want to get through this. Right. Articles. Yes, I want to show you the articles, but that's also very, very useful. When you go to our website and you go to education, you'll see there's educational articles. That's a whole array of articles by our head of education, Andreas Talasinos, very clever guy. What you have to do is, this is recent ones, so you go down and you load more. Do it a couple of times and then you get to the basic ones where he talks about the structure of the market, the ABCs. But this is also very, very interesting, gives you answers to your questions, and this is what we want. We have questions, we want answers. Every time we get answers, you discuss them, it makes sense, then you can learn and you can grow. All right. I just wanted to make sure you see that. Okay, there's a lot of them. Go and check them out. Okay. There's our educational, that's where you get them. This is how they look. I already showed you. Okay, videos. We've got videos there as well. I'm not going to stand still on this. Our time is a bit limited. There's the short videos I told you. There's longer videos as well that answers questions. You'll see when you go there. John Jurgensen, that addresses a lot of stuff. Commodities, commissions is also there, guys. So if we don't get to it, you'll read about what is spread, what is commissions. You get different accounts. Let me answer that while I'm while I'm on it anyway. Is you get different accounts. The standard account normally don't have any commission. It's just a spread, but the spread is a little bit wider. If you trade short term, if you trade higher time frame, then you don't even see it. It doesn't really matter. But if you trade very, very short term, like 1 minute, 5 minutes, then if you look the space between on the chart, the space between the ask and the bid line, I can show you very quickly. That's going to make sense. Let's go to the 1 minute. there you can see the space between the ask and the bid line, right? When that's small like that, I'm on the 1 minute, then it doesn't even matter. But when it becomes big, when the spread is big, then it influences your trade because of the structure of the, it can even be half of, a possible wave here. Then it gets difficult, guys. So that's why we have two separate accounts. The ECN account is where standard account is where you have larger spreads for the higher time frames and stuff. On the lower time frames, you battle there. But if you go to the ECN, then you pay a small commission and your spread is much lower. This is the ECN account. This is why it's so small here. If you go to the standard account, let's do this. I'm just gonna jump quickly to a demo standard account and I'll show you the difference. You can see how it looks now. And now you will be able to see how it looks after it updates. You can see it's about 2 or 3 times that. It makes a big difference on the smaller time frames. So obviously you're going to use the normal ECN account when you trade in the smaller time frames. If you trade in the bigger time frames, then it doesn't really matter. So you can choose any of them. Right. There's videos about all these different things: margin, leverage, pips, everything. Educational videos, position sizing, all sorts of interesting things. Some indicators there. Right. There's lots of sections there. Let's just go through this. Technical analysis gives you a definitions of technical analysis. A lot of guys don't understand what it means. They think you look at a chart and you just jump in, everywhere. Over trading, nope. Technical analysis, when properly, the definition properly is why do we look at the charts? Yes, we look at the charts, but we look at the charts to find a new early stage of a new trend. That's what we do. Right, FXTM Invest is also very interesting. I've got let me just quickly show you where you can get that. That's also important for me. If you log on to your account and you go to recorded webinars, there's a whole treasure chest of different webinars. Unfortunately, you can't access that from the outside. We will get answers to your questions. FXTM Invest, let me just go to your education when you've logged on and then to webinars. And then you'll see it shows the upcoming webinars. And then after the upcoming webinars, it's recorded webinars or past webinars. Now there's a whole host of them there. Do go and watch. I've got some of them there. FXTM Invest applied. How do we use this copy trading system where if you know how to choose proper strategy managers and follow them, then they can, if they make a profit, you make a profit, and they can make nice profits for you over time. Right, that's a very important one. I teach a lot of people that start trading, but they actually just want an extra income. They don't really want to become traders because to learn any language, takes time and effort and practice. They don't want to do that. They just want to have an extra income. I teach them much easier just how the system works, copy trading, how to choose good strategy managers, guys with a solid foundation, and then you start very small. You start building something there, right? So like a seed that you plant, that grows. That's one of the ways normal people can use this to actually start, building up a portfolio, building up something for the future. Pivot points, there's information there on the website. I'm not gonna stand still here. Ebooks, that's also available when you log in. The most useful one that I tell the guys to read in the beginning. This is just for interesting sake. If you're interested, this is scary scandals. Is this one, The Road to Success: 50 Successful Traders Habits. This is how successful traders think. Very important. So we, like I said, we go for the ebb and the flow of the market. You don't just jump in for no reason. You take calculated risk and you manage that risk. So this is a very handy tool in the beginning to read once a week. Just get those fundamental basics in your mind frame. How do we think? How do we approach the market? Right. Very handy, those books. Strategies, there's some strategies there. Once you understand the structure of the market, then you'll be able to use them to see if they work for you. The market has a rhythm, very important. The market has a rhythm and structure. You also have rhythm and structure. Your available time, your risk profile, your available funds. So first you get to know the language of the market, the structure, the rhythm of the market, and then you must check what works for you. Your rhythm, how does the two intersect? Right. It takes time and practice. Much easier with Forex Time Invest, obviously, but the opportunities are there for you. Right, I see some interesting questions here, man. Okay, let's just go through here, then I'm going to jump on there. Some strategies there. Education is important. Okay, glossary. Glossary also, a lot of guys get confused when they use terms, but they don't even know what the term really means. So if you're using terms and you're not sure, you can go to the glossary. Our professor also did that. He's very, very good. He's got a master's degree in technical analysis, registered with most of the world's associations, technical analysis associations. So he did this and he did a proper job, guys. Okay, so you get proper definitions here. Right. What we do is we've got lockdown now in most of the countries, but normally we go to our traders, we have seminars, we speak to the guys, we meet them, we show them, and that's very, very nice for us too. So often with this Forex, it's online. You never see the guys that you really you're working with. So it's always nice to meet our clients. Right, webinars, like I said, there's a lot of webinars. Always, you can link in, you can check at your own time. If you're not sure, then you can just email me. We've got backups there. Some of them gets put on the site, some of them not, but they're for a couple of months. They're on the go-to webinar. If you email me, then you can then I can send you the link to those things. Education, very, very important. Without education, the chances of you making it is not very good. We understand that, guys. That's why we have a proper learning and mastery process that we help our clients with. We know that you need to repeat things to remember that. That's how our minds were designed. Okay, it's real people you're dealing with here. When we Skype, you see me, I see you. That's nice. So right, there's signals. We've got lots of tools for you to use, stuff to do, and articles, some explanations of strategies. If you understand the strategy or the structure of the market, then all those things make sense. Otherwise, yeah, there's videos. We've got lots of stuff for you from an educational point of view. And last but not the least, it's the seminars. Right. Okay, I'm going to go to while I answer the question, we've got a couple of more minutes. Just going to back to the top. So you've got my email there. There's my email. If you've got any questions and stuff, just email me. Right, I see there's a couple of nice ones here. Technical analysis and fundamental analysis. Right. Fundamental analysis, when you look at the news and events and reports and stuff, things that causes prices to change, right? So they cause it. Problem is you just never know what's going to happen. You can take an educated guess, but you also don't know what's going to happen. I don't care if you're the best economist in the world. You can take an educated guess, but what are the people going to do? You don't know. The chart is where we study the effect of those changes. We can see what the people are going to do. If a big company does research and they find that they want to buy because of that research, you can see it on the chart. Even though you don't read it anywhere, you can see what the guys are doing. That is why that structure, guys, is so important. Technical analysis, on the other side, we don't try to predict. We look at that structure of the market and we look for early stages of a new trend. From a business point of view, if you take a calculated risk at the early stage of a new trend, then the profit potential is more than the risk you take over a series of trades. Please listen carefully. Over a series of trades, we never know what each individual trade is going to do. That's why the training on the old charts and the demo is so important. prove to yourself, get confidence in this, that this can work. There is a language, the market does speak, there is a structure. If you take a calculated risk and manage it well, then it becomes possible to make a net profit over a series of trades. Right, so even if you do like fundamental, it's not going to tell you what the price is going to do. With technical analysis, you can see that structure changing. You know where to put your entry, your stop loss based on that structure. You take calculated risks and you manage it, and you know, it's just more solid. Right. I must say something in favor of the fundamentals. Some guys say I'm negative about it. If you trade longer term, then it becomes important. Guys that do trade with hedge funds and investments and longer time positions, then it's good to know, where, what do those reports say? Where's the development coming? What is the decision makers doing? So, because for the long term, it influences that long term shifts. But you're still going to have to go to the back to the charts to get your, entry points, to get your more accurate entry points. So the market might go down. When will you know if it really is going down? Obviously by looking at the charts. So even fundamental guys, if they want to trade, must open their charts to see what the guys are actually doing. So I hope that answers your question. Isufo, sorry. All right. Okay, guys, time is up. Thank you for listening. Here's my email if you have any questions. I'm always looking for two groups of people. I know there's two groups of people in front of me when I speak or I've got a webinar. The one is the guys that really have a passion for this language, that want to become full-time traders. Contact me, we start trading. It's like a language that you learn. It takes time and practice. The other guys just needs an extra income. Those guys I help by showing them a little bit about the language of the market, because that is what traders, full-time traders, guys with a solid foundation, do to make a net profit over a series of trades. And then I help them to understand our copy trading system, Forex Time Invest, and how to choose a couple of good guys. And then you start small, like planting seeds. I call it the orchard strategy. And you start taking calculated risks there. And if you chose wisely, then the guy has the ability to make a net profit over a series of trades, and then you also make a net profit. It takes time. It's a bit of a longer term strategy, but then you can slowly build that up. Just a word of warning, a lot of people misuse out of ignorance, misuse that copy trading by putting a lot of people, I want to get rich quick with the strategy manager. Remember, that guy cannot predict the market, right? All of the strategy managers there is not necessarily good. They might have cracks in their foundation. You have to check yourself. You have to check, qualify the guy. How does his equity curve look, and so on. You're also taking a calculated risk. If you put in too much, then the mental pressure is a lot, and it causes a lot of emotions, and you can't keep, you're like planting a seed. You don't keep the seed in the ground, you take it out the whole time. And if you plant and take out the seed the whole time, it's not going to grow, guys. You need to plant it and let it go, give it time, and then manage that, that risk as well. Normally what I do with the Forex Time investors, I tell the guys, you plant your seed, you can actually see there in the charts how long, how is his trading record, how much percentage wise does he make every month. So you can, and I tell the guys, manage your expectations there, wait for the guy to at least double the account, and then the amount that you invested, and then take the original and plant it with another guy. So, and in that way, you sort of like build a portfolio of strategy managers that spreads your risk a bit, and it's a very good long time way of building an extra income, especially in the times that we are now, where a lot of businesses are going to suffer. This is if you do that properly, it's the way of building an extra income that over time can make a big difference. Right, thanks for listening, and I hope you have a nice day, and see you again later. Goodbye.